So hey guys, you're welcome back. It's your boy Keys. We're live on CoinMarketCap's blog. SEC rejects VanEck's spot Bitcoin ETF over fraud fears. So article was done by Leo Jacobson. Is an article review. If you find this at the end of this tutorial, if you find this helpful, innovative, if you find this informative, if you find this informative, educative, you can always want to click on the subscribe button. You can give this video a thumbs up and stay tuned for more, guys. So, citing the potential for fraud and market manipulation, the U.S. Securities and Exchange Commission has rejected asset manager VanEck's application to launch a Bitcoin exchange and traded fund. In an order issued on November 12, the Commission concluded that the application for the CBZX exchange to list and trade shares in VanEck Bitcoin Trust had not met the burden of proving that it is designed to prevent fraudulent and manipulative acts and practices and to protect investors and the public interest. So the SEC's long delayed ruling comes as no surprise, as Commission Chairman Gary Gensler has been fairly clear that he opposes spot Bitcoin's ETFs, which would ensure shares tracking the value of Bitcoin. So ETFs hold a basket of underlying assets such as commodities, bonds, or a collection of securities like the stocks that make up the S&P 500. So a spot Bitcoin ETF would hold the cryptocurrency itself, while a futures-based Bitcoin ETF holds a basket of BTC futures contracts rather than tokens. Under Jet who taught cryptocurrency and blockchain at MIT, before taking over the SEC, the agency has already approved two futures-based Bitcoin ETFs, ProShares Bitcoin Strategy ETF (B2) and the Valkyrie Bitcoin Strategy ETF (BTF). So they have proven remarkably popular with more than $400 million traded on November 10 alone, according to Bloomberg senior ETF analyst Eric Bachunas. He added. So for context, Beatles volume puts it in the top 2% of all ETFs. So about what MDY, the SBDR S&P Mid Cap 400 ETF Trust traded. So guys, we have CoinMarketCap's podcast here available on Apple Podcasts, Spotify, and Google Podcasts. You can check it out. So the rules apply. The application was technically a request for a rules change by the SIPO Big ZX exchange that will allow it to list and trade shares of an Bitcoin trust. Specifically, it sought to bypass the need for a comprehensive surveillance sharing agreement with a regulated market of significant size related to the underlying or reference Bitcoin assets. The SEC said to do this, BZX would have to demonstrate that the Bitcoin market as a whole or the relevant underlying Bitcoin market is uniquely and inherently resistant to fraud and manipulation, stating that it did not agree that was the case. So the SEC pointed to seven possible sources of fraud and manipulation in the Bitcoin spot market generally that it had cited in turning down previous Bitcoin ETF applications. So we have wash trades, persons with dominant position in Bitcoin manipulating Bitcoin pricing, hacking of the Bitcoin network and trading platforms, malicious control of Bitcoin network, trading based on material non-public information, including dissemination of false and misleading information, manipulative activity involving the purported stablecoin Tether, fraud and manipulation at Bitcoin trading platforms. So guys, that's all we have on the CoinMarketCap's blog today. If you find this helpful, innovative, informative and educative, you want to stay subscribed. If you have any questions, feel free to drop your feedback, comments in the comment section, and see you in our future uploads. You can check out our airdrops. We've dropped some updates about ongoing airdrops and more from CoinMarketCap. I'll be dropping the link in the description box so you can check them out. Peace out, guys, and stay safe.